Welcome to Theo Trade. This is Don Kaufman. It's July 9th, 2025. It's Wednesday afternoon. We have exactly 10 minutes to go to the cash close. The S&P is up some 34 handles. Well, today's trading session hasn't been without its pullbacks, but tell you what, it's actually a fairly wild-looking chart throughout the course of the day. There was immediately out of the gate this morning some buy-side activity met by what was gonna be the spectacular reversal, only to see markets kind of grind, if you will, for the last 5 hours. It was exciting, at least the first hour and a half. Thereafter, it has turned into a grind. Nevertheless, let's get right down to business here on this Theo Trade evening update. I got 4 trillion reasons to fade this marketplace. Of course, what I'm referencing in that particular case is NVIDIA. If you have not seen it yet, in terms of NVIDIA, it did hit the oh-so-important number, the first of its kind, $4 trillion market cap. All right, it's going to close just shy of it, but it hit it, people. I saw it. We're basically at a $4 trillion market cap, and I got to tell you, this marketplace, we're divergent. There's divergences all over the place, and that's exactly what I'm going to point out here on this video. When I'm talking about divergences, is just time out for a second. What's driving the S&P? I mean, do people look at that? What's driving the S&P? If I cruise over, for example, to the advanced decline line, okay, got the S&P's up, 31 points. I know it's only a 0.5%. We're not talking about, like this huge move to the upside, but what's really driving it? For the most part, again, about a 50-50 advanced decline line in terms of the S&P 100, right? All right, it's 57 underlyings to the upside, but Google is counted twice, so, you got nothing on there. Nevertheless, okay, the market right now, what's it really being driven by? And when you start to dig into that a little bit, it's a bit alarming. So obviously, NVIDIA is one of the primary drivers in here. It's the usual suspects. You can throw a little side order of Meta on there. Speaking of Meta, take a look at Meta like on a year-to-date basis. And I've actually got this kind of prefabbed right there, little year-to-date percentage. Meta's up 22% on a year-to-date basis. NVIDIA's up 17% on a year-to-date basis. What else you got? Yeah, you could definitely point out Broadcom up 20% on a year-to-date basis. Let's get really interesting at this point now. Okay, when you start looking for, example, the S&Ps. The S&Ps are only up about 6%. So there is some wild divergences clearly going on, because all you have right now, and I really mean this, all you really have today, yesterday, is tech and nothing but tech. That's it, okay? Let's actually look around a little bit at some of the ETFs that represent sectors. The one, obviously, to start with would probably be the financials. Reason I'm bringing up the financials, as I said a moment ago, things are kind of diverging a little bit, not for the better. When I bring up the financials, I actually want to bring up auto expected moves. What I want you to see is you recognize the S&Ps. They've got a bid under them today, right? As I said, we're up a 0.5%. Okay, you start looking at the financials, they're only up 0.3%, so on the lagging end of that. But the financials are actually sitting, okay, on the lower edge of their expected move, which is pretty critical, because when it comes down to it, what do you got? You got technology, you got the financials. Okay, we're going to go through a couple of these kind of sector ETFs, because it's quite shocking right now. You got nothing. The point that I'm trying to make right now is you got nothing. Like, I can actually show you the year-to-date in the financials. The year-to-date in the financials, it's not bad. Like, financials as a whole are up about 8.6, which is, positive versus the S&Ps. Okay, but the fact that they've diverged in the last, 2-3 trading sessions, I think is critically important. Even on a day like today, where the marketplace is running a little bit higher, the financials are not participating in that. So then I actually looked a little bit further than that. I looked down the list of what I always term like the usual suspects in here. Okay, I noticed obviously stuff like Costco, some sell side activity, but Costco can't get out of its own way. But looking at Costco, looking at like Walmart, okay, that brought me to look at like XLP. Okay, XLP, what is it? Okay, well, It's consumer staples. This is actually consumer staples. Where are we in consumer staples? Lower edge of the expected move. All right, so now you got two sectors, basically lower edge of the expected move. And as I actually cruise to the bottom of the screen over here, I really, I did find like, the XHB, okay? All right, that's an odd sector out. This thing couldn't carry much weight, but it is up 3% today. That one is the upper edge of the expected move, but look at the ones that matter. Here's the XLK, which is actually the technology select. Okay, this one will actually kind of catch you off guard. You realize the technology sector basically flat on the week. This is another retail sector slightly down on the week. Okay, here we have XLB, which is materials. Massively unchanged. We already covered XLP. All right, here's healthcare, massively unchanged in the week. Shall I continue? Okay, semiconductors, basically flat on the week. I'll just keep going over here. There's nothing else. Okay, what do we got over here? All right, mildly higher industrials. Okay, and then XLY, which is again, this is always a funky one. It's consumer discretionary, but it's really like Amazon and Tesla. It's actually lower in the week. Okay, and the reason I'm actually bringing this up, as I said, there's actually quite the divergence in the force right now. It is, okay, a handful. It's not even all of the monsters of tech. When I term the monsters of tech, you look at something like Tesla. All right, Tesla's the odd stock out. It's actually catching the lower edge of the expected move and sitting on it. Okay, but every ounce that Tesla has actually fallen, okay, Broadcom has actually picked up and kind of run with the ball. Broadcom, though, as I said, it's only mildly higher on the week. In fact, which we'll look at in a minute, even the S&Ps, okay, which kind of surprises people, the S&Ps are even slightly down on the week. All right, so you had some sell side activity, obviously, on Monday, but again, even the S&Ps are still slightly down on the week. As I was saying a moment ago, though, you're like, how are the S&Ps even up? Okay, it's market capitalization. That's it. It's just all market cap all the time. If you have Meta higher, okay, you have NVIDIA, which is now a $4 trillion behemoth higher. Okay, there's your marketplace. But here, okay, as I said a moment ago, I got 4 trillion reasons to fade this marketplace. If you guys have never heard the term fade the marketplace, okay, for the most part, take a couple little bearish stabs every now and again. One of the things, though, that is driving the marketplace right now, it's retail, okay, call buying at like cash open, and it has been the preeminent, if you will, driver of this marketplace. Okay, out of the gate every single day there is huge activity buying call options. The reason I'm saying like you got to be a little careful with this, okay, that is fading as the day actually progresses. And again, these trades are fading and fading very rapidly. Right out of the gate this morning, you can see the huge bid in NVIDIA basically faded throughout the course of the trading session. All right, really, really important to kind of acknowledge some of the price action that has changed in the market. So as I was saying about kind of fading the marketplace, I can see, the S&Ps are like, no, man, these things are going to close right near highs. Okay, yeah, but what's the primary drivers? All right, you look at something like Microsoft, retail call buying out of the gate. From there, what did we do? Basically, we sputtered. Okay, it's going to get a little crazy in the next couple of trading sessions in here. If you take a look at Meta, retail call buying at the open, we completely sputtered. Almost everything in terms of price action today, okay, was into your cash open. It's the same thing, again, whether it's Broadcom, okay, whether it's NVIDIA, whether it's, Meta, okay, you name it. What you're actually seeing is this immense number. When I say retail call buying, literally retail, they're opening up the market. They're buying calls like it's going out of style, trading at the ask or above. It's actually pumping these shares, and then they're effectively doing nothing. And yeah, we reversed a little bit today, but it was more of a scare than really anything out there. But all these major tech stocks look, okay, very, very similar in respect to the fact that, again, that retail call buying, and then it basically kind of petered out. The S&Ps, yeah, it's fairly quiet out there, but we're actually doing decent volume. We're going to clip over 1 million contracts in the S&P futures over here, sitting at or near all-time highs. Okay, but this trade that you've got to watch, and you really do have to watch this in the next 2 days. Okay, the market right now. And again, if I told you, you're like, hey, I see the S&Ps are up 35 today, but the market as a whole is actually slightly lower in the week, you'd probably be a little surprised. Okay. You hit your highs obviously last Friday, and here we come into the closing bell. Let's do this. It is it. It is over. Okay. But you hit your highs basically on Friday. And ever since then, again, forget about the sell side activity you saw across the marketplace. What we're seeing right now, again, it's just the market internals are not good. There's a big divergence. There's actually some sell side activity, even persistent, as I showed you in a couple of different sectors. So as I, often will say, like the next 48 hours will be a big tell, into Thursday and Friday. Yeah, there's some news that can drive the marketplace. Okay. But the question is retail going to have the steam to be able to sustain some of the gains out there? All right, last but definitely not least, looking at the expected move, approximately a $93 move. So what we're looking for, again, what we're looking for here is a $93 move. And again, $93 move higher, $93 move lower. Actual move right now, I mean, for the most part, this is where we're sitting. This is massively unchanged on the week. So there is a hell of a lot of room for movement, okay, just into Thursday or Friday of this week. I like to be very non-biased when it comes to looking at the expected move, okay? But I also want you to be mindful that we just had, okay, 2 consecutive significant breaches of expected move. All right, now you kind of feel like things kind of quieted down. Again, the big story here, it's not even that, $4 trillion market cap. It's about these divergences. Okay, we have sectors that are headed, okay, flat to slightly lower. Tech is actually basically masking some of the broader weakness to the S&Ps. The S&Ps are owned by big tech, okay? And that is what we're going to be looking at into the remainder of this trading week. Thanks everybody for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.